Hello, everybody. You know me. My name is Marco, real estate broker in Chicagoland. This is my good buddy Grant, the loan magician Zabilski.
Yeah. Yeah, I work with Model Mortgage HPLB, Chicagoland area, doing loans in all Illinois.
Awesome, awesome. So we're going to go ahead and talk a little bit about what's going on in the market currently.
Okay, well, just so everybody knows what we're doing, we figured since everything is changing so much so quickly, on a daily and sometimes hourly basis with both real estate regulations and laws and what they're doing, as well as the mortgage industry, Marco and I wanted to get on and answer questions that you guys might have for everything, just keep up to date if you are thinking about buying or selling a house in the near future. First, okay, so um, we used to have a whole bunch of flexibility with how many options there were with loans. I prided myself, like Marco said, I was the mortgage magician. I could kind of make anything work because
Yeah, dude.
I work with a network of wholesale lenders, and I had a slew of products to choose from. I no longer have that array that we had before, and this is why. So the reason rates usually go down. So when a stock market goes down, that causes investors to say, okay, I want to get my money out of the stocks, and so I'm going to put it into something that is safer. So they put it into bonds, mortgage bonds, and when they pay so much in mortgage bonds, and the mortgage bond prices go up, our rates for you borrowers, the rates go down, and that's what's been happening recently. March 6th, 5th, 7th, those dates, lowest rates we've seen in so long because everybody was buying those bonds. But now, since there's so much volatility because of the coronavirus, now the investors, they are freaking out and they are taking their money even out of the mortgage bonds and just turning it into cash. They're buying gold, they're buying things, getting ready, or they're just keeping it in cash or gold to get ready for the impending huge recession that is about to hit. So, because of that, those are the investors that are usually buying or funding those non-qualified mortgages. So all those extra products that we used to have, those are usually funded by these investors who are no longer funding those. So what does that mean? So usually, if you have a regular mortgage, conventional, that's when we say, hey, we need 2 years of your taxes, and everything conforms to the regulations put out by Fannie Mae and Freddie Mac. Everything conforms to their guidelines. Those are still up and running because the government is funding those. They bought up all the bonds. They're putting so much money in to keep it liquid. So if we have a regular conforming loan, or an FHA or a VA or a USDA, those are still fine. We can still do those at amazing rates. So if you do qualify, you got some good FICO, you have good income that's staying solid, those can still happen. But now the other end of the market, those non-qualified mortgages, things that we might need to use bank statements to prove income, or other non-qualified areas where we have to use special programs, those are no longer funded by anyone. So those are kind of out of the mix for the moment. They're on pause. Um, yeah, I want to check. Do we have Marco? Do we have any way to see if anybody's popping in questions while we're talking?
Oh, yeah. Currently,
I
we
don't. I don't see
have.
anything on my end, but I'm on the Zoom part. I don't know if you're on the Facebook part.
No, I have the Facebook part on a separate window. So we
Okay.
have quite a few people watching, and then as well as no current questions yet. If you guys have questions, please throw a comment in, and we'll be sure to answer them.
And do you want to? I mean, I could just keep on talking all day because there's so many changes. Do you have anything that you want to
Well,
throw in?
it's something that my clients ask me a lot, especially with current things going on.
Yeah.
So, what is you would say is like the minimum credit score someone would need to qualify for a mortgage now?
Okay. So, minimum. Let's talk minimums. usually for those riskier borrowers, the ones with lower FICO scores, we kind of guide those towards FHA. So FHA, the reason why FHA was ever set up, it's for riskier borrowers that might not have as high a credit score, and they also probably don't have as much money to put down for down payment. So typically the FHA FICO requirement is 580 and above, and you get to put down only 3.5% for that down payment. Now that is still into play at that federal level. They have not changed the guidelines, but who is changing the guidelines is the lenders themselves. So even though FHA says, yeah, still can go down to 580, most lenders are going to say, hey, we can still do FHA, but the thing that's different is you're going to need a 660 FICO score, or a 640 FICO score. They're raising the requirements for FICO score. Can you still only put 3.5% down payment? Yes, you can, but you might need a higher FICO score. Now, there are still some lenders that are allowing that FICO to go all the way down to 580. The thing is, I've seen some when you see those requirements loosen up all the way down to 580, you're probably going to see a tightening somewhere else. So some lenders are saying, sure, if you have a 580 and you need this FHA loan, we can make it happen, but maybe we'll make you pay 10% interest rate over market rate. So instead of seeing that 3%
Wow.
interest rate that we can do on FHA right now, maybe you're paying 13%. So it might bite you in the butt somewhere else.
Gotcha.
And so let me just add this.
Of course.
Just for strong financial principles to set yourself up for a strong financial future. This might be the time if you've gotten yourself in over the last 5 years, you got yourself into a home where you were kind of stretching your limit, and you're like, well, I can make the payments, it's good, it's solid, and I'll come out on top in the end because I'll have all this equity. But now something's happening with your income or coronavirus, or you're not sure what the future holds for your industry and your income. The prudent thing might be the best thing to do right now financially, and that prudent thing might be to sell your house and go smaller. It just might be smartest nobody should ever feel bad about taking a step back into something smaller just to make sure that you're in a long-term financially healthy plan, because there's going to be nothing worse until if you're waiting till the last second until there's really nothing left in your bank account and then freaking out. You might as well just say, hey, we've got this far, we have $70,000 worth of equity. Now let's take that and we'll take a step back and go a little bit smaller, because that's why you become a homeowner, right? You become a homeowner,
Exactly, yeah.
Put yourself in a smart financial position, so then you have that equity, and that equity you're building that for times like this where stuff hits the fan and you're like, well, what do I do? Well, hey, I have a nest egg of $70,000 equity. Now let's take a step back and just ride this out until stuff gets good again.
So you would say it's a good idea to always make sure you have X amount of equity in your home at all times in case of whatever, right?
Well, sure, yeah. The reason why people have this dream to become a homeowner is because it's almost a forced savings plan. Having that equity, being a homeowner can get you out of a pickle in times like this. Now look at the renters. The renters are kind of freaking out, saying, "What do I do?" They don't have any equity. They're just renting.
Yeah, exactly. Yeah.
They're just renting, and they don't know, not everybody knows that they're going to be able to pay their rent. And there are some places and landlords that are going to offer forbearance, which is, hey, you can have 3 months where you don't have to pay your rent. And same with mortgage, they're allowing that for mortgages as well. But a forbearance is, hey, you can not pay for 3 months, but in month 4, you have to pay all 4 months at once.
Oh, really? That's
Yeah.
the caveat to
So
that.
that's
I
the
did not know
caveat.
that. That's
So
a forbearance.
that's
Gotcha.
what some renting will do. But mortgage, you're going to have more options. There's forbearance, but there's deferral. So
Gotcha.
if you're in forbearance, like I said, you could just not pay for 3 months, but then month 4, you got to pay it all. But if you do go deferral, then you don't pay those 3 months or however long, 6 months, however long they decide to do it for. And then you don't have to pay those until the end of whenever the completion of the loan is. So whether it's at the end of that 30-year loan, then they'll just add on another year, pay it at the end of that. Or if you decide to sell your house, that would be the end of the loan when it's paid off completely, because in a sale it's completely paid off. So that's when you would pay those back. So a
Gotcha.
deferral is what's best for the borrower. A forbearance is what's best for the lender.
For the lender. Gotcha. So, what advice would you have for renters out there that are in this situation right now, and they are able to go ahead and purchase a home? Would you advise them to purchase a home relatively soon?
Uh, well, yeah, this is probably a really great time to.
I mean, I was thinking because I've never seen interest rates that low,
Yeah,
and we may never have this opportunity again.
right. It's
Which,
almost free money. I mean, I'm seeing
yeah,
interest rates par at 3% or sometimes below 3%. So and it's volatile, so it's changing every day. So sometimes it's over, sometimes it's under. But yes, if you can qualify for that regular conventional Fannie Mae, Freddie Mac, or the FHA, if you can for those government-backed loans, if you can qualify for those, this might be one of the greatest times uh, to put yourself in that position where you're owning. Um, and
gotcha.
if you're renting and something happens to your income, this is a conversation that you should have with your landlord. Uh, So if you're renting, you need to call your landlord and have that conversation. It will be a forbearance. It won't be a deferral, but your landlord needs to set up a plan. Say, if you can't pay it now, when can you pay it back? And then you set up that plan. If you're in a mortgage,
And get it in writing.
and
Always get
always get
everything
it
in
in writing.
writing.
Yes.
Otherwise, it never happened. I learned that 5 years ago
Oh yeah.
when I started this business. Yeah.
And if you're in a mortgage, then you're going to call your servicer, whoever's servicing your loan. So sometimes typically it's your lender, or whoever you're paying the money to every month. You're going to have a conversation with them, um, and get that done.
Gotcha. So, one more thing. So if someone was not necessarily quite ready to go ahead and purchase a home, they wanted to get ready in the near future, what's one of the some quick, easy things they can do to increase their credit score quickly, um, and maybe change their purchasing picture? Something they could do relatively quickly to take advantage of what's going on.
Yeah. Real quickly, if you guys just joined us, Marco and I, so Marco, realtor extraordinaire. I am in mortgage. I do mortgage loans. We just wanted to paint you a good picture about what's going on right now, how many changes are happening really quickly in this industry. So if you have any questions, put them in those Facebook Live comments, ask us, and we'd be happy to answer those for you right now. So to answer your question, what can they do to get their FICO in the right place, put themselves in the right position? Well, this is almost a perfect time for that, as crazy as it seems right now. Because even though things are happening to people's incomes or jobs, the way we're living right now is completely different than normal. When we're out and about, we have a number of things that are just in that monthly budget that we are no longer having to pay for.
I was thinking the same thing. We're staying home, saving money, not traveling, not. It's
Lots of
crazy.
people
It's
are
amazing.
saving a lot of money right now if you still have your same income. And even if you're not, maybe you're not spending as much as you used to be. So this is the perfect time to get yourself in a good position if you want to be a homeowner and put yourself in that good financial position to have that equity in the future in case something like this happens again. So best things to do, number one, let's try to raise that FICO. One of the main ways to raise FICO is getting your uh, getting the percentage of how much of your credit cards you're using, getting those percentages under 33%, so under a third or under
So
30%.
the 30% is a number.
Yeah, you want to get those under 30%. And so each card 30%, and then overall under 30%.
Gotcha.
That's going to be one of the main drivers to keep that FICO score up. Also, uh, especially in a time like this where you might be losing income, you still got to pay those things on time, right? We're going to be choosing priorities. Some people are going to have to just choose in priority right now, and paying your credit lines, whatever those credit lines are, whether it's a car payment or a credit card payment or your mortgage, or paying these things on time is very, very important to that credit score. So keep those in check. Prioritize those so that you don't get these 30-day, 60-day late dings on your credit score, keeping that down, because that'll stay on that for years and years, you know?
Gotcha. Another question I get often is, you have different credit reporting agencies, right? You have TransUnion, Experian, there's another.
Equifax.
Thank you. Which one's the one that got hacked a couple years ago?
Equifax.
I think it was Equifax. Are they back to normal? Are they still in business or?
Yeah, they're still in normal. We found out that China hacked them.
Oh,
So,
really?
yeah.
Oh, okay. Among other things.
Yeah.
But I hear you mention FICO a few times. So, what's the difference between, say, your FICO score, and then your other credit scores from these other credit reporting agencies?
It's the same thing. So
Same.
apples, yeah. So FICO score is your credit score. It's basically you take all three credit scores. You find out, when you're getting a mortgage, we're gonna run all three. We're gonna see what your scores are for all three, and then we're gonna use that middle number. So, and then if you have
Gotcha.
a co-borrower, if you have two people on that loan, we're going to take the middle number of the lower person. So just so everybody knows that.
The middle number of the lower person.
Right.
Gotcha. I didn't know that. Okay, cool. So if you guys have any questions, please throw them in the comments. We'd be more than happy to answer them. Cool. Do you have any questions for me as far as the real estate market is concerned? Anybody you've been doing business with recently?
Yeah. So if somebody wants to buy a house right now, what are you having to change on your end of having them see properties? And vice versa, if somebody wants to sell a property, if they're listing one, how is that affecting showing their house?
Well, what I've been noticing with the way things have been going with coronavirus is that the biggest issue is people maintaining their employment. So what's happening now? Most deals are falling apart because the buyers are losing their jobs, right? So, and it's, they don't want to do it, but that's what's occurring. But the people that are qualified, motivated, ready to rock and roll, they are moving ahead, full steam ahead. There's a little bit slower in the market as far as showings and things like that, but there's still a lot of motivated people out there because the financing is so attractive that we talked about earlier.
Yeah.
So those people are charging right along. It's a little different now because we're wearing masks and gloves and going through houses, and that's new. That's completely very interesting. But other than that, the market's charging right along. No complaints there. Yeah. Anything under, say, 300-400 is moving relatively regularly. Above that, it's slowed a bit because the financing changes at that price point. Yeah.
And obviously it's going to be slower now than a usual. Like, we're getting right into season.
Yeah.
Heavy season, which is usually April through July, is really heavy season. And obviously it's going to be a little slower now, but does that mean, so I was just reading in Housing Wire, does that mean that it's going to be completely gone? No, they think it's not. It's just going to be paused and moved on down the line. So normally this is really a really heavy season because people with families, people with kids, they want to move their kids in between school sessions. So now it just seems like it's going to be moved down to August or September or whenever this kind of clears up. So maybe that will be the boom season this year.
Yeah, well,
Um,
I couldn't agree with you more. A lot of clients that I've been working with, they're a little bit of a holding pattern until there's some normalcy to this.
yeah.
And it's because we've been incrementally getting more strict as this has been unfolding, right? So then when things start to loosen up, we're allowed to have parties again and things start to loosen up that way. I think it's going to go ahead and boom, like you said, because everybody's staying home, saving money, thinking about making moves, and when things kind of start to get back to normal, it's going to boom again for sure.
So talking about being more strict in this time, on my end for mortgages, well, there's parts that are strict and there's parts that's loosening up to keep it liquid. But since there are so many people losing their jobs, losing their income, they really want to be sure that when you're signing on the dotted line, that nothing has changed. You know, that you still have that job. So number one, if you're working with a loan originator like me, please be honest from the start because you won't be able to hide it. If you are losing income or you do lose your job, it will be found. Like the calls are happening on day of closing. They're getting verifications on day of closing because that's how close they want it to be. So before, for things like proving income, we could have done your application, gotten your income, and then within 4 months later, we could still use that income. It was a 120-day requirement. Now they've changed that to it's got to be within 60 days that we see that income. And then on top of that, if uh, if you're what was it? It was 60 days to 10 days. Oh, verification. Yeah. So verification of employment, things like that. Before it was 60 days. And now that's got to be within 10 days. So
Oh, wow.
they have crunched
Wow,
down
that's on
on
the
that.
back end. I never knew that,
Yeah,
yeah.
this is Ginny. So this is GSE. They're changing things for these are all government backed loans. So changing it to 10 days. Within that 10 days, they got to get that verification because obviously people right now, week by week, jobs are folding.
Yeah.
Um,
Happened
which,
to me on two deals these past 2 weeks. Yeah, that's the buyers lost their jobs, yeah, and I like they did the 10-day thing. I wish there was a way that, as far as being the listing agent or the on the agent side, that
yeah.
we could know what to be sooner because we can get our properties back on the market. But yeah, if you're currently have your house on the market and you get an offer in, I would say go ahead and maybe even request the verification of employment upon getting the offer, or something like that, because market time right now is precious. Um, so that's definitely something I would consider if you do have your house on the market right now and you get an offer in. Double check their employment.
Yeah.
And cash is king. So if someone's offering cash, take it because there's no mortgage contingency, and then you don't have to worry about that issue later.
Yeah.
Definitely look into that. Yeah, for sure.
So everybody, if you just joined us on this live, Marco and I are talking about real estate and the mortgage industry and how coronavirus has affected it and what's different and what you can do to put yourself in the best position if you want to buy or sell a house right now. And that sun just keeps moving. Let's move this way. See that house. All right.
Yeah, for sure. I'm sure in a couple of the comments here we have a couple of questions.
Yeah.
Mary asked, what time factor can we expect appraisals to use for comparable sales? That's a great question. So I think it's circling around where you're purchasing a home, you're getting the appraisal, and then the appraiser is going to go ahead and pull comparables. What time factor would be would apply?
Yeah, so usually it's depending on the area, it's between 3 to 6 months. If it's an area with a really flowing market, it'll be 3 months. But if it's an area, small town, and there's not as many sales, maybe it'll be about 6 months. I actually have not. I don't know if you have, Marco. I haven't read anything about that changing for appraisers. I've heard that appraising requirements are changing based on social distancing. So now for um, purchases, if it's a primary resident or it is your secondary investment residence. You now have three choices. You can do a desktop appraisal. You can do a drive-by appraisal. So that's when they just drive by and they see the exterior of the home only. Or they can do a traditional. And then if this is your secondary home, just personal home, then that has to be traditional or desktop, I think. And then if it's refinanced, they'll need to do a traditional. And they see the exterior of the home only. Or but as for the time, yeah, that's a good question. I haven't read any differences in that. I don't see why it would right now be different, because that's in the past and Corona hasn't hit yet. Now, once it hits July, is that going to be a difference? Because that would have been, the 3 months of Corona. I wonder if they'll change that requirement.
Yeah, that makes sense to me also. Gotcha. Well, I'm looking at the we don't have too many more questions here, and we're approaching our half hour. I want to respect everyone's time. Was there anything you wanted to add?
Totally.
Grant,
Yeah,
Lone Magicians of Bilski?
There's a ton. So just so everybody knows
Yeah.
what they can expect right now, because everybody's looking for money at the moment, and the CARES Act just passed on Friday. So the stimulus package, each person can get up to $1,200 direct payment. In order to do that, make sure that you have filed for 2018 year and the 2019 year, filed your taxes. If you have not filed your taxes, or you didn't need to file your taxes, say you didn't make enough income and you don't need to file your taxes, file for a return. You can go onto the government website and ask for a quick application. It's just they ask you for the most basic information, like your bank account number, so they can direct deposit it, how many dependents you have, and it's just filing for a quick return, just to show, hey, I'm here, I didn't make that much money, so that you'll still get your $1,200. On top of that, so that's if you have an annual income of up to $75,000, you'll get $1,200. If you're between the $75,000 and the $99,000, then it incrementally gets less, $5 less for each $100 extra a year you make. And then on top of, if you make more than $99,000 a year, then you don't get anything. Same if you have two people in the house, you have a married couple, then it's going to be 75-75, so it's got to be under $150,000, and then the phasing out goes from $150,000 to $198,000. On top of that, if you have dependents, if you have children, for each additional qualified child, you get an additional $500. So essentially, you could get up to like $3,900 for a five
Oh wow!
family.
Yeah, think about that. Yeah.
Yeah. And then on top of
how
that,
many kids would you have to have for that?
I think 3.
3 kids? Oh, okay.
3.
Gotcha.
Yeah, 3.
Yeah.
So also unemployment has been improved significantly. So if anything did happen to your job, this is the time to go and apply for unemployment. And usually there's a gap time from when you apply to when they start paying you, but they have gotten rid of that gap. I mean, you won't get your money immediately as you apply, but they'll cover for that gap. They are on top of what they are paying you. They're paying an additional $600 per check, so that's even more help for unemployment. And then I think it goes now for 39 weeks, up to 39 weeks, which can be a really, really huge help in this time.
That would be huge to anybody who needs it, without a doubt.
Yeah.
Cool. All right, guys, let me just double check the comments really quick, see if I missed something.
So if you just joined us, we are answering questions about what's going on right now with coronavirus and the real estate market and mortgage industry. So if you're possibly looking to buy or sell in the near future, or you're just curious about what's going on or how you're going to get your money from the government or unemployment, then we're discussing that. So feel free to make some comments or ask some questions.
Perfect. Actually, next question by Paulina. When do we need to file by to get that return? Is there a cutoff date?
Yes. So usually it's April 15th, right? So they just extended that until uh
I think it's July.
it's July 30th or July 15th.
I want to say July 15th.
Yeah, I think that's right.
Yeah.
Yeah, I'm
I
blanking
think
on
so
the
too.
date. But I think you're right. So, but obviously, the sooner you do it, the sooner. I mean, we're supposed to get funded by starting in a week and a half or so. So the sooner you do that, the better, the faster you'll get your direct deposit, that $1,200 mark. And if you, so that's for individuals, right? If you have a small business, there's also $349 billion going towards small business loans. And that includes if you're sole proprietor, independent contractor, right? So if you're just the
Oh
only,
yeah.
so you can be considered that small business if you're independent contractor, which most of my friends from my last industry, they're really hurting in this because they're independent, they're gig people. So
Totally.
if you are a small business, uh, the applications will open up this Friday. And then if you are independent contractor type, sole proprietor, that's going to open up the Friday after, which is April 10th. So
April 10th, I believe I heard.
it
Yeah.
is on a first come, first serve basis. So get in there and get that loan. This is a loan, right? But the loan interest rates are starting at 0.5%.
Oh wow.
That's free money. That is free money, and
That's free
there are
money. Yeah.
potentials for there's possibility of loan forgiveness for the first 8 weeks. So go into, I mean, you want to get on the website, the government website, and read about the CARES Act and see if you are one of the people that can qualify for this. And because loan forgiveness, I mean, that could be such a huge help with this.
It's free money. So CARES Act, CARES Act.
CARES, correct.
CARES Act.
Because the
Okay.
government cares.
Oh, so nice.
Yeah.
Cool. Cool. Yeah. So we're a little bit over our time. I want to respect everybody's.
Okay.
Yeah. I hope everybody learned a thing or two. And if you ever need anything else, please reach out to myself or Grant. We'd be happy to help.
So you can find me, Grant Zabilski, Motto Mortgage HPLB. Just go to hplb.com. That stands for Helping People Live Better. You can also go to helpingpeoplelivebetter.com. But that's what we stand for. We are here to help you in your financial journey and really help you live a better life. So hopefully this has been helpful. And then Marco.
Yeah, I'm sure all of you know me. Give me a call, shoot me a text. We'll do a Zoom chat, and we'll have a conversation. All right, guys. Cool. Alrighty, guys. Take care. Thanks, Grant.
Yeah, thanks,
Take care,
Marco.
brother. For sure.
Talk to you.
I'll talk to you soon, huh?
All right. Yeah.
Bye, bye.